Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and we have Ryan Mallory on the line. He's the founder of SharePlanner.com. Ryan, how you doing this morning?
Doing great. Thank you for having me.
Tell us a little bit about SharePlanner.com.
Yeah, SharePlanner.com is a website that I founded about 10 years ago, and it's a swing trading service. That's always been my specialty, and I provide traders with real-time swing trade alerts via text, email, and also in my chat room.
Okay, well, let's get to some of the hot stocks today. And the first one is Oracle. Kind of disappointing the street here. Let's bring up the pre-market chart here. Kind of had a head fake yesterday, and then the big decline today. Is this something you're going to be active in today?
Yeah, it's a stock that prior to its earnings, it was looking like it was on the cusp of breaking out, above that 44.50 level, and then obviously with yesterday's earnings, it just completely changes the picture on it. I have no position in it right now, but if it can hold that $42 level, there's a lot of support there going all the way back to, late last year. Actually, you could probably go all the way back to May of last year and just draw a line off of those highs and just find some support there that comes across to the $42 level today. If it can hold around that level, and it's highly questionable if it will or not, but if it does hold it, then there might be a good bounce opportunity to try to ride it up and back up to maybe $43, $44.
Do you use pre-market levels at all for parameters, perhaps, or stops, or potential entry points?
Once the market opens, I pretty much ignore what it did in the pre-market and just trade off of the day's action. But when I'm trying to get a flavor for what the stock might do on the day prior to the market opening, I'll definitely look at this the pre-market action as long as there's some liquidity to it.
Okay. I want to review. I think wasn't last time you were on. I think you had a setup in Tesla, or was it?
Yes.
Yeah. It was. How did that work out for you? I was thinking about you. That was bad.
Yeah, I mean, it's trended nicely. I haven't traded it in a long time, but since then, it had that beautiful breakout, in the 220s, and once it broke through that level, it's been off to the races since then. So, yesterday had another strong day, but it seems like it might be getting a little bit frothy at this point.
Okay. All right. Let's take a look at some stocks on your long radar, and let's start with Amazon. We talked about that a little earlier. You like the support forming at the 420 level.
Yeah. So it's like I don't know what to make of it. If you want to call that like a massive bull flag that's been forming back into late April or not after its earnings, or if you just want to call it a nice consolidation period. Either way. There's a point here to where I think if it crosses back above, this 430s or so, like let's say if it gets above like 436, 437, the stock's going to be breaking out of that consolidation period, zone that it's been stuck in for a couple of months now, and it should start rallying, make a push to the 450s, if not higher.
Okay. Google's been kind of quiet as of late. You think this is giving you a setup for a potential move?
Yeah, this thing's really been, like you said, really quiet, but it's really been struggling too, just to really find any kind of attraction. Traction in the market, and the market in general is like that too. Over the last 6 months, but Google, if it starts getting to where it's dropping below 539 or so, and I'm looking at the GOOGL chart on this particular one, but if it gets below like the 539 level. The chart starts to break down there at that point, and I would probably say that would be a good short to take on, and you could probably play it with a fairly tight stop loss around 555 or so.
Okay, moving on here. Alibaba here, kind of out of favor after the earnings pop here. Should take a look at Alibaba here. Or do you want to wait till maybe it comes back down and fills that gap from earnings day?
Yeah, it definitely has that gap area there, but before it ever gets to anywhere close to filling that gap, you have this massive level of support that it had formed back in February, March, April, and a lot of May, and it's that support right around that $85, $86 mark, and it's a really nice base. But you can see that the pullback over the past month has been quite orderly, and it's taken it right back down to that $86 level, and it's got a little bit of support at the $50 or 50-day moving average. So I like the light volume pullback on the stock, and I like how it's coming back to that base area there. That if it can actually catch a bid, I mean, I think the stock will probably be trading back in the 90s in very, very short order.
Yeah, and you have a good reference point there with that low on earnings day as a potential out here. I know it's trading up in the pre-market here. You did dip under 86 on Tuesday, got to 85.61. A couple other lows in the $86 area, and then the low on earnings day was 84.91. Let's talk about some stocks on your short list here, and the first one, DKS, Dick Sporting Goods.
Yeah, this one I've been watching, and the market right now makes it really, really difficult to pile up on a lot of long or short positions, just because that as soon as there's one momentum or any momentum going in one direction, it just quickly snuffs it out and sends it the opposite direction. But DKS is one that I'm watching for today. If this market can't hold its game, this is going to be one of the stocks that I'm going to be looking at on my short setups. But if it drops below 52.85, this stock really starts to get really ugly really fast. 52.85, I think you can put a stop loss around 54.50. Have that stop loss or the risk on that trade be below 4%, and possibly see the stock drop, down into the high 40s, maybe mid 40s.
Okay, there was talk about them going private, but that seemed to have faded out. That's what partially responsible, so the big run up. Another stock here you're looking at on your short list here, Best Buy. We haven't talked about that one in a while. What are you seeing in the charts in Best Buy?
Yeah, on the Best Buy, you have a low that was put in back in January of this year, and if you just take a line and you just connect the dots, going across, you have a very nice line of support there on the daily. And, the support that I'm watching for there is around 33.85. You can put your stop loss at around 35.15. I don't think the stop loss is as good as I would have liked for it to be, because I think this one carries a higher risk of getting stopped out a little bit quicker than on a DKS trade. But nonetheless, the support level is very well defined. I mean, if it breaks that 33.85 level, I think this thing's going much, much lower.
Okay, yeah, that's I like those kind of formations too. When you have the stocks sitting on a series of lows there, and then it breaks it. See if you can get some more momentum to the downside. Also, you've been keeping an eye on Monster Beverage on the short side. What are you seeing in the charts in Monster Beverage?
Let's see here. Yeah, the stock there. I mean, this one here. There's a lot of resistance right there at that 134 level, and it's in conjunction with the 50-day moving average as well. So, if this thing starts to peel back a little bit, I wouldn't say step in front of the momentum from the past 3 days on MNST at all. I would wait to see if this momentum stalls a little bit right there at that 50-day moving average, which is also in conjunction with some of the resistance at 134 going back to March of this year. If it starts to break down there, you have a good entry level to get short on, and maybe ride it back down into the mid 120s.
Yeah, I could definitely see your style there. The way the stocks just kind of hover on the lows here. It is support. Not only do you have potential sell stops in the market, but you also have people, leaning on that level if it gets taken out to go the other way. Wow, Mark is getting a nice pop here this morning. Ryan, you got any thoughts on the general market?
Yeah, it's definitely rocking here just as we're talking right now. But for me, there's been a little bit of a descending trend line off of the May highs for the S&P 500. It looks like it's going to break through that here right at the open this morning. So the big question is, can it close above that descending trend line? If it does, then there's a good chance we're going to be retesting all-time highs. Until then, I think it's really hard to get long on a bundle of stocks, just because in doing so, you're risking a reversal like we've seen many times this year already. And so for me to get really comfortable where taking a lot of my cash off the sidelines and I'm adding a lot more swing trades to my portfolio, I think it needs to establish new all-time highs and show a little bit of a running action thereafter.
Okay, let's just comment on some of the bigger components in the S&P 500 here. Apple, been in a trading range, won't really go up, won't really go down as of late. Any thoughts on Apple?
Yeah, I think there's a few price barriers that you want to watch for on Apple. To the downside, it's around 124.75. If it breaks below that, then there's the potential for it to go, even lower from there. But in between 124 and to the upside of 132, 133, it's really just a range bound stock. So to really get a handle on direction of where Apple wants to go moving forward, it needs to break one of those two price levels.
Okay, now it's moved up to the second biggest component, Microsoft.
Yeah, this is one that I think is a bit bearish out there right now, and it's moved nicely higher over the last 3 days, but you had a triangle pattern that had been forming, over the past 1.5 months or so, and that triangle pattern broke down earlier this month, and it's retesting the underside of that resist or the broken support. So if it can't break above, let's say here, if it can't break above 46.40 or so, 46.45, and it starts to trend back lower, I think there's a good chance that you could see a move to fill the gap on that thing all the way back down to 43.
Yeah, it's been laboring since I'd had that pop up after earnings. Just moving on here, just a couple stocks that have just really were out of favor with the looming interest rate move. You get a stock like Procter and Gamble, sold off here, getting some momentum to the upside. Any thoughts on Procter and Gamble? Are you chasing it here, $4 off the low? You think you might be able to get it in, bring it in a little bit cheaper?
Yeah, with Procter and Gamble, it's still in that nice downtrend. I mean, it's just consistently making lower lows and lower highs, and until it can perhaps break. What I would ultimately like to see, what would be enticing for me on this kind of a stock, would be if it can break above 81.25 or so, and then consolidate a little bit, because it's made a pretty good move for this kind of a stock. It's made that move from 77s all the way up to almost 81 now. So I would like to see it consolidate around that 81 period, maybe give us a little bit of a base to work off of, and then get long when it breaks back out of that base.
Okay, all right. Just got a couple more here for you. Boy, the financials have been hot. Any comments on Wells Fargo or J.P. Morgan?
Yeah, J.P. Morgan. Yeah, like you said, they're hot, and to try and step in front of these stocks right now, and even think about trying to short something like that, even when the market's looking bearish, these things tend to hold up really well. So yeah, the only option really on the bank stocks right now is strictly from the long side. But the J.P. Morgan, it's consolidated nicely over the last 6 days. I think it's setting up probably for another run, to get itself back into the 70s, and if you look at like the 10-day moving average, it's got nice support there under the 10-day moving average, and even more so with the 20-day moving average. So if you take this trade and you get long on the breakout of around 68.75, and then you put a stop loss right there where the 20-day moving average is, it's just a couple of clicks below the 20-day moving average. You got a really tight risk parameters, and you got the potential for a $3 to $4 move in JPM.
Okay, we've been on the line with Ryan Mallory. He's the founder of SharePlanner.com. Ryan, thanks for your insight on the markets and these stocks, and we'll talk to you again soon.
All right, take care.